Hey everybody, good morning. Wade, Philip, Sergio, Laura, Indy, Kevin, Arturo, Donald, Nikki, Andreas, JB, Eric, Craig. Hey everybody, how's it going? And welcome to the show. Today is the FOMC meeting. Today. And morning, Rungemer, Gary, Michael, Cliff. If you want to chat with me, like everybody saying good morning and hey, and all you gotta do, throw the button, click the button right over there, the little green overlay right in the corner. Be a subscriber on the channel. A few seconds later, and you can chat on the live stream while I'm live. Now, if I'm no longer live, you'll have to leave a comment down below if you want to talk to me, or expand the description where it says more underneath the video there. Click that. $5. You can come get in Discord. You buy the market roadmap. You get the roadmap indicator that I show on the charts all the time that I use. Super reliable. And that pattern, I've been doing a lot of testing on it. Works on all time frames. And the basic pattern with the conservative entry like it hits the target upwards of 80% of the time on average, all time frames. That's just crazy to me that I figured something out that works that reliably. So it's crazy good. And anyway, glad to have everybody. Got my white monster, which is like POG, papaya, orange, guava, or whatever that flavor is. It's interesting. One of the people who works with me, I was asking her, she ventured out. She was like, "No, I stick with the white because I like the white." I was like, I gotta have all the different flavors. Anyway, good morning, everybody. And before we get into anything, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation here, intended to be informational, educational, fun, and entertaining. It's not a recommendation to be buying or selling anything out there, all right? Don't buy stuff from gurus like me if you don't trust them. And we are basically at the 3-year anniversary of me doing this. So thank you to each and every one of you that has chosen to support me over the last 3 years, whichever way it is, even if it's just watching this video. Thank you. Crazy ride. And so don't buy stuff from gurus if you don't trust them. Hopefully I'm building trust. I'm in here to do this honestly and help people at all times. Eagle Scout way. But don't buy stocks. Don't buy options. Don't buy Forex. Don't buy futures. Don't buy cryptos. Don't buy bonds. Don't buy treasuries. Don't long them. Don't short them. Don't trade them. It all involves a substantial risk of loss. I cannot stress this enough. And if you're here looking for personal financial advice, look, it's not what I do. I just share what I'm doing. You got to make your own choices, all right? I can't tell you what to do. I can't get into your personal financial situation. It's just the limits that are on me. I'm not into that, all right? You gotta hire and consult a financial advisor that has a fiduciary duty to give you advice based on your situation. But for gosh sakes, make sure you trust them too, because let's be honest, most people out there just trying to make some of your money into some of their money. All right? Now, we have the FOMC meeting coming up at 2 p.m. 2 p.m. today. This is the big show today. I would be very careful getting into anything this morning, long term, that's going past, anything you're getting into this morning, you may want to have an exit plan just in case. All right? Now, the way this thing has chopped up heading into this, I don't know. I'm giving it maybe 60-40 odds that we get a pop as the reaction, like the net. Now, one of the weird things I'm seeing, I don't have this where I can show it to you. This just came to me as something I was watching yesterday. The net longs in ES futures contracts were exploding higher yesterday. That means, there's thousands and thousands of ES, that's S&P 500 futures contracts getting traded. I have an aggregator that watches the time and sales data. The aggregator kept saying that people were going long, net long. And yesterday, we don't usually see these days where we accumulate net longs in a big way. So either that was people closing out their shorts. I reset it to 0 every day. So either there were a lot of shorts going on ES, which seems unlikely with how far up we've come, or there's people are positioning for a potential pop coming out of FOMC, which seems more likely right now based on the number of ES contracts and the amount of money we're talking about. It was in the tens of thousands of net long contracts yesterday, and it was already, I think it was already over 10,000 this morning before the market even opens. So we're seeing a large accumulation of net long positions right here in front of the FOMC at 2 p.m. That's to me, that's kind of been a tell. I've watched, it's not always reliable. I've watched past ones where they go net short for a couple days heading into FOMC, and then we get a big drop. So the net long, maybe, it gives me like a 60-40. I'm thinking 60% odds that we're going to pop, 40% that we get a large drop. And if you've ever watched the FOMC, likely we're going to stop clear. We're going to do some sort of up and down before we actually get the move that sets the direction. So be careful. And 2:30 p.m. is when Jerome Powell gets up and speaks. He usually prefers about a 20 or 30 minute speech, and then takes questions for like 15, 20 minutes. So usually over about 45 minutes, usually. We'll see. We'll see where we get to today. I'll be around. I should be around on Discord at least. And I see no reason to really do a live session, but that's coming up, 2 p.m. right there. And it's typically fireworks. We could get some volatility. Definitely. Now, the reasons for potentially going down would be how high we are. Now, the market is expecting a rate hold. So it's really going to be about the dot plots today. We're kind of going to hold. The 5.5 is the expectation. And Jerome Powell hasn't liked to spook the markets with a surprise rate change, really. The last one we really had was back here in June, where they raised a little more aggressively than they had telegraphed. But they've done a pretty good job telegraphing exactly what they were going to do. So the prediction has been pretty much bang on, except for that one instance right back there in the recent history. So likely to hold steady at this point, and it'll be all about the dot plots and what they predict for rate cuts moving forward. I think we could see less projected rate cuts moving through this year. Now, why? Why do I think that? Let's kind of close this up and pop over here. This chart right here. Looky, looky, looky. What we have cooking. We've got the interest rates, the DGS2, which is the 2-year constant maturity rate, which is kind of what the Fed chases. All right. That's actually climbing since January. Kind of made a bottom January 8th, and we've been climbing. This is just a weekly updated thing. This is a weekly chart. Keeps climbing. Now, they can't cut, or they shouldn't cut. They shouldn't even change. Like, we should just keep holding steady right here until DGS2 does something. And I speculate that we're going to see energy prices potentially going higher this year. I mean, yesterday, the administration of the United States putting out that they plan to completely refill the Strategic Petroleum Reserve before the end of the year, potentially before the election. That's a lot of demand. They drained that sucker, and it's still pretty much at minimums. That's a lot of energy demand. That's going to take a lot out of the market, and that could propel oil, CL over here, could be propelling oil quite a bit higher if they go after that thing aggressively to get it filled back up. I mean, it took us what? 18 months to suck it down? And they drained it over 18 months. So if they're going to refill it in 6 or 8, or what we got left, 9 months, that's pretty aggressive. I mean, they were using the Strategic Petroleum Reserve to ease prices off, supposedly. Now, what's that going to do to prices if they aggressively refill it at twice the rate? It's an interesting situation. So, why do I bring that up? Higher oil prices, that's like the biggest component in inflation in this country. I mean, let's be honest. Everything you do, some way affected by the price of oil. Everything you do. So oil prices going up, that's pretty much going to trickle through everything. And it's not the inflation that makes prices rise. Prices rising is inflation. So that's it's a fundamental concept that a lot of people say wrong. Like, oh, the prices are going up because of inflation. No, the prices going up are the inflation. That's, it's a, sometimes we think about it backwards. The prices rising are the inflation. Like the inflation is, that's the name for prices going up. So, and we're probably not going back down on the base prices, especially as energy probably is going to climb here. Major John, good to see you, sir. Glad everybody's here. Anyway, let's dive into what's happening, what's crapping in today. So we did get that little pop yesterday. We didn't quite extend it out to the targets though. Came up right into this resistance. This is interesting to me that we have made multi-day resistance right there. Now, if we're gonna blast it on out, 52.16 on S&P right there. We did the pullback. We've kind of been chopping here. We're like 70% likely. We did the pullback right there. It was 2-day pullback, popped up above the 618, kind of tested it with a higher low here on Friday, right back up in here. This may be indicating we're heading on up here, possibly 52.16, possibly 52.50 on the next extension. Now, one of these extensions is going to be the last extension. And we're going to do some kind of major pullback. This rally has lasted slightly longer than the rally we had from March of last year through July of last year. Right? Looking back in, I'm moving targets again, moving price alerts. I love it. I'm just going to clear that one. Right here, this move from right here to right there, that move is what I'm talking about. That took, I can never quite remember it. Took 137 days, 104, well, let's go 140 days. 140 days, 96 trading days, 96 bars. This one right here, we have just exceeded that. All right, we got a wicked 3-month correction off of that last run. What's going to happen this time? All right, we went up higher, more aggressively than we went up last year. We're likely to run out of runway here at some point. So we've got 97 bars, 144 days. Essentially in the books already. We're slightly more, 1 day longer so far. That's basically an echo. We could go a little bit longer. Could last a little longer. Usually I don't go for time, but size-wise, we're more aggressively up. It's not really an echo up as far as price goes. We went on a steeper trajectory higher. Lengthwise, we're right at it. Correction? Quite possibly. 3%. We haven't seen anything greater than 2% in a while. So that one was a 10% correction. What would 10% do for us right now? If we grab this baby and we went down 10%, we'd be looking at somewhere around 4,600. Now, if we went up higher, we might go down lower. We could do something more aggressive on the retrace. Be careful. Could retrace the entire move up, even like a 20% retrace. All right. I just want everybody to be prepared. Like, be careful out there. Know when you're wrong. It's not being wrong that cost you the big money. It's staying wrong. Like, if you're getting long now and you're like, I'm going to trade aggressively for that 5,500, when NVIDIA becomes the biggest company in the world and we start down, make sure you know when to cut everything. All right. When do you cut it? Don't ride it all the way down and then you've got to sit through a year worth of chop. All right. I mean, look, if you had not bailed here, at some point when you were wrong, you got to ride it all the way down and all the way back up. And it took us 2 years to get back to where you're positive. And maybe your position is one of the ones that hasn't come back and made a higher high yet. Now, at this point, it looks like we may rally right on up to that 5,500 area. I mean, that's the three paths off of here. We either go sideways for a little bit and then pop it, or we retrace it, which we're not retracing so far. May chop sideways for a bit and then pop. Of course, we could do a quick retrace and then a pop and then a drop. There's nothing set in stone yet. Everything's possible at this point. So just throwing that out there as a potential. Time-wise, very cautious. This was one of the longest moves ever. We're in the top 95% of longest moves without a 2% pullback. This one right up there with it. So we're back to back. Longest moves in history. Longest duration without a 2% pullback. It's just crazy to me that we do that back to back. Just shows the irrational exuberance, I guess you might say, in this market right now. We're hanging in this channel. It's a very aggressive upwards channel. If we break a higher channel, it's going to go even crazier, higher, faster. If we break down below it, we're probably going to retrace back down to the roadmap line, or at least back down to the breakout point. The breakout point being the high we set back here in the beginning of 22. I'm cautious right now. I really am cautious right now that we may see a large retrace. Now, like I said, the small time positioning, we may see a pop up here to 52.50 based on just what I've been seeing. And if we go look at the overnight action in the S&P, in the futures, we actually kind of did a long consolidation here overnight. Made a slight higher high this morning. Did not tag that upside target. 52.50 on futures. Futures are running about 50 points higher than the S&P cash index. If you're unfamiliar with futures, ES1 exclamation point on TradingView gets you to the S&P 500 futures, and the one exclamation point gives you the constant contract. That automatically rolls over from contract to contract. If you're unfamiliar in futures, there you go. There's ES. And why do I look at futures? Because we get this overnight action. Whereas on the cash index, it stops trading, and then we resume the next morning. We stop at 4 p.m. when the market closes, reopen at 9:30 when the market opens. That's Eastern time. And NQ right here, overnight action, holding bullishly above the roadmap line on the 30-minute. We're in the 70% likely to go on an extension zone, 18,450, possibly 18,550 on that next extension higher. And then if we get up to that zone, that kind of sets us up with the bigger pullback, breaking above that 618 level, that conservative entry, for potentially going on up to this 18,870 area up here. Potentially go tag that zone right up in there. S5FI, stocks above their 50-day moving average for the S&P. That's a lower high so far. This is eerily similar to what we saw on the 200-day. Look back here. Last time, when we topped out back here, see that pattern? This is when we topped out in the market. We made that all-time high back in 22. We made the high in the stock S&P 500 stocks above the 200-day back here in April, and we turned around and we actually topped out in the market, and then we went on a large correction that lasted us 2 years. Now we've kind of done this same similar pattern on a smaller time frame here. Is this, the 50-day. We made a peak back here in January. Made a lower high here in March. We could go on an extended 3 to 6 month correction here. Typically, after we've broken out of the top, we go break out the bottom, where 20% of the S&P 500 stocks are above their moving average. This, we had almost 100%. We were darn close, 92%. Now, even though we're making all-time highs, or right up there near it, this is backed off, and we're only at like 72.96% at the close yesterday. We've been all the way down to only 47% just recently, while we keep grinding these all-time highs. This is not the signs of a healthy market. This is a warning sign right here that we may be approaching a top. So even if we get that 60% pop that I'm thinking that we might see, it could lead to a drop where we flush out a lot of the weak stuff in the markets. All right, everybody on the same page with me? Everybody kind of got the lay of the land? Now, there's still the 40% that we just drop. Like, that's entirely possible that we just plummet. I'm just, based on the technicals, the market technicals that I've seen the last day or so, it just gives me this feeling like we might pop before we drop. So just throwing that out there. We are getting kind of cooked, though. This drop scenario getting more and more likely the longer and longer we prolong doing any kind of correction in the market. Russell, now NQ was the futures for NASDAQ. All right. So QQQ, any of the derivative instruments for, NDX, all that stuff. I just look at NQ because it's simple, easy. You divide by 41, you can get roughly the QQQ prices. RTY here. This is Russell, IWM, all the other derivative things there. This is looking somewhat more weak. Like we established a high back here. We established a lower high. We have not broken below the bottom of the channel. But if and when we do, we're probably coming down to at least the roadmap line, if not some lower levels. And if we don't hold support there, we could go significantly further down. Significantly. And that significantly further down could be an extension below the low we saw here, like 15, possibly 1350. 1500, 1350. That would correspond with the IWM's 130 area. That looks like we might need to go do a visit of that area and finish up this correction. Russell has not gotten out of this correction. We've been in the correction since back here in November, and we just keep on being in this correction. Like this is not even tried to make a new higher high. This is indicating something's afoot in the market. Usually, most recessions and corrections and everything, the Russell will lead us out. The small caps move faster. Right now, that's not been the case. And it shows that maybe the reality is we're still doing some sort of correction and that Russell may need a final flush out before we see this thing bottom and we actually make a positive in the market that we can build off of. All right. Moving on. CL has been looking pretty strong, but glancing off of that 83 target, I really want to see this get some higher targets here. It would be normal that we would retrace back to this little orange zone where we topped out here. Had a lot of trouble getting through. Had trouble, and then popped up through, found support, launched up to the target at 83, retrace back down to it, and then push on up off of it to higher targets. 85, 86, possibly 90 would be the better place I would like to see go if we're going to keep going bullish. Now, I think this is the initial indication that we're about to see a potentially aggressive move up in oil, but unclear. We may need another correction before we can actually do it, because this was kind of some gobbledygook. We had a lot of trouble breaking this. A lot of trouble breaking through this zone here. And while I would like to see it break on out, not for economic reasons, but just my trade reasons, add some clarity to this direction. You know, things trending, you can make money. Things chopping, incredibly difficult to make money. So we've been chopping for a good long while here in oil. I'd like to see it trend a little bit so we can make some money off of it. GC, that one keeps consolidating. I thought we might need to push just a little bit lower into this zone. That's once, twice. Yesterday I didn't like those two candles. Still don't like them. 3 times. We might push down to this level. If we get below, we start getting below this stuff though, down here, we could go on back down. So a little bit cautious. I kind of want to see us hold this area here, like a quick little retrace, and get out of here. Gold does have a potential setup to go much higher and may experience some more volatile moves as we move forward. Hey Sledge, good to see you. Opal, Nick, Opal, Rick, Thrifty Nifty. Glad to see everybody. Bitcoin, BTC. Well, futures tapped right down in. As I said yesterday, we may need to fully test into that support zone right down there, and that seems to be what we've done. Watch for that candle to flip green. That would be an initial indication that we're done, and we're going to launch on out of here. Now, going to the spot market where we got a little bit more data. Dun, 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 dun. Different color candles. Right here. Consolidate, extension. And we've kind of done everything I expect to do to the downside perfectly. That bounce off the 1272, retrace back to the breakout, down to the 1618, find some support. So want to watch breaking above the 30-minute roadmap line. The lower time frames, the 15-minute, we're already testing into it. The 5-minute, we're already above it and back tested it. So this is the stuff of reversals right here. We're shaping it up. I thought this was going to be it yesterday afternoon. We tested deeper and we're coming right back up in there today, this morning. That could be the bottom for now for the next extension. The next extension targets are up there around 76 and 84, I think it is. Run those up. Run this back up. Zoom it back up, baby. Zoom, zoom, zoom. Kimberly apologizes she's not here this morning. She's riding a train in DC. She'll be headed back home tomorrow, though. Dun, dun, dun. So this pullback right here, high. Click on the high, the low, click on the low. Once we break above this 69,000 area, upside targets at this point, roughly 76, 77, and 80, 81 for now. And that also could correspond with a move up to 83 for that bigger 1272. It'd be a shame to get all the way up to 81 and not just hit 83, and that be the first target for this giant pullback back here that we did. And we topped out in November 21, made the bottom November 22. From all this way, 70% likely we're going to tag 83 before we get some substantial retrace, and maybe up to 80% likely. 101, entirely possible, and much higher levels, entirely possible too, also. But one of these points is going to lead to a bigger retrace. So right there, 83. All right. Ethereum. Also potentially making a bottom. We went a little deeper. We actually did kind of this extension thing. Thought we might do right down in here. Look at that. See that gap we did in the futures? We went right back to it. And I'm going to remove that box for now. Clean this up. Just want to make it a little more visible here. I got a lot of crap drawn. I just want to highlight a couple things. What the heck is that? We did this gap up right here, and we came back and retested it. Now we're turning green. That could have been all we needed right there on Ethereum as far as the correction goes. It's my job to warn you on the potential bad, all right? Like, you've got to make your own choices on how we trade it. Getting back above 37.50 sets us up for 4,400, possibly 4,700 on this next extension. This move right there would be about 70 to 80% likely. Get a move up through that 37.50, shooting for 43.50. That could be money right there. All right. That's a high probability pattern. Ooh, let's see what that one's doing. Oh, yeah. That's a conservative entry. Looking for 23 on the upside right there on CDLX. I got into that one already. Based on this measured bounce setup, breaking above. Looks pretty sweet. Move for 20, possibly 23. And dang, I'm going to move that. I don't know how I move these price things so easily. Sometimes I don't even get a thing to lock it into place. You can't even lock them. Stupid. Anyway. Looking for that move. That's a pretty sweet setup. JT's in that one. Anyway. DXY. This has been an interesting thing, and we are breaking back above. So this is a case where we had set up the bearish move. We held a 3-wave down to the 618, bounced very clearly, very strongly up into the resistance, had a little trouble getting through it. Now we're pushing above it. This looks like the dollar is going to go higher right now. And I'm just going to just clear this up and like simplify it just a little bit. So this retrace right here, breaking above the 618, sets this up. We're likely to go visit this 105 area right here. Just simplified pattern. I mean, sometimes the simplest explanation is what we're going to do. Right there. It's a high probability pattern right there for the dollar, the rally right back up there. How could you take advantage of it? Something like UUP or FXY, FXB, FXG, FXE. So right there. Yeah. Thanks, Sven. Svenborn. 3 years, man. Can't believe I've been helping people for 3 years. And we've had some pretty life-changing results. Like, some of you have told me some absolutely amazing stories. Ways you've been able to help other people. Way beyond what I could do by myself. That's why I do this. I really just like helping other people. And the fact that you all as my followers can help other people beyond anything I can touch and do by myself it's super powerful. Chipotle announcing a 50-for-1 split, and I don't know why that's bullish, but hey, no, higher dollar. Don't get caught up in mainstream media narratives. Like, the dollar and gold can go up together. Look at this. Let's circle back for a second. All right, let's talk about something. I've already got the dollar. I need the gold. Let's look at something for a second here. Look. While sometimes they go inverse, sometimes they go parallel. That's flying together. That's going inverse. All right. It's only inverse when it's inverse, but sometimes we just go the same path. and dollar was climbing a little bit, gold just languishing, then dollar didn't really pull back much, but gold popped up here, getting a look like they fly together when they fly together. They fly opposite directions when they fly opposite. I mean, it's not like you can use the dollar to do anything for gold. All right. It's incredibly difficult to fall into that trap. All right. The dollar's done nothing while gold has been up crazy. So dollar has basically been flat 7% for the last, since 2019, and gold's up 64%. So don't get stuck. Don't get stuck thinking that anything relies on the dollar doing anything. All right, pricing things in dollars, sure, the value of the dollar does affect it, but don't think that the dollar causes anything. All right, causation, and this is just a temporary little pop before potentially dropping further. When we look at this bigger pattern right here, we're just coming up a little bit deeper into the retrace. And this could be a one wave up, retrace, second wave up, before a bigger down. All right, be careful, be careful, be careful. CMG announcing that 50-for-1 split, MSTR. Is that going to be the retrace? Quite possibly, quite possibly. They announced a big dilution, buying another 9,000 Bitcoins. Mr. Sayer was asked what the exit plan for Bitcoin, the Bitcoin position is. He said Bitcoin is the exit plan. So the company basically putting all of their eggs into Bitcoin by the lead dog, the CEO of the company. And he thinks that Bitcoin is their exit plan. That sounds like a dangerous vision to me, but hey, I mean, more power to him. He's if you had just bought MSTR back when they started buying Bitcoin, you'd be doing pretty good right about now. So we'll see where this one shakes out. I do think we're going to get another retrace before we can go higher. I don't know which level will hold. It could be somewhere in here. And we could just pop off from here. That was a pretty substantial retrace already. From that high down to that low, about 31%. That could qualify as a wave 4. If this was like a wave 1, 2, 3, 4, and we could see a fifth wave higher, right up into some of these higher targets, 2,000, possibly 2,400. There's nothing that tells me that's done at this point. I would like to see a retrace, but they can keep trucking higher. PDD, well, doing the bullish move. That's the wrong color candle, but 164 is the upside target. If we can hold above that zone, and that's why it triggered my alert that was right up here at like 141, I think it was. Triggered my alert. If we can hold that, hold a close in there somewhere today, 164, possibly 178 on the upside. S&PS. That's China stuff, though. Be careful on PDD. S&PS. Bounce off that trend line. Could do another extension. 652. That's just some crazy big numbers. High price stuff. That looks like a complete dumpster fire. That's a reverse split, 1 for 70, and probably going down in a blaze of glory. I mean, zero is still zero. It doesn't matter how crazy things get. When you reverse split just to stay listed, watch out below. GIS, nice pop, wrong color candle. Resistance is still right up here for GIS. Best Buy. Having some trouble breaking through that downtrend. It's downtrend of highs. Broke up through, retested. Got to get above. This is the point. Like if if we get above that line, that high, if Best Buy can break above that, it's probably going up pretty strongly. If we don't, if we get back below this downtrend line right here, high, those three highs, if we break back below that, it's going down lower low than what we made right back here. It's going lower than that zone. So there's your 2 points right there. Right there and right there. Playing in between. No high probability anything. MODG. Top Golf Callaway Brands. Potentially breaking above the roadmap line. Still has lots of resistance. I mean, wow. This is why I'm always cautious. Look, bounce off the roadmap line. Did an extension lower. Didn't even slow down at the 1272. Slowed down at the 1618 and then ripped on down without even retracing. That was a huge flush out. Potentially the lowest low here. Moving up. Finding a lot of resistance. Getting through the roadmap line again. But this is an initial positive indication that we may be ready to move on up higher. Initial indication. It's not anything high probability that I would be trading, but we're at the 1272, the 1618, it's 1660. Probably need to be getting above this stuff right there, which is right where we're finding some resistance. If we want to get above that, then we can start talking about a trend going higher. The roadmap line still pointing down. Still super cautious on that one for now. NTES, I'd like to see that fully retest the roadmap line, and it kind of has a bigger pattern for potentially going down. But if we can break out above that resistance right there, potentially going up. That's a coin flip type situation, because that's, and do we take it from 100 down to 80, or do we take it from 100 up to 150? It's kind of rough. CWB, resistance at the roadmap line. This is leveraged internet in China. Yeah, leveraged China. That's like two things I don't like to trade going against us here. I don't like China. Doesn't always follow the patterns. I don't like leverage stuff. Don't always follow the patterns. Resistance here may turn down one more time, but if we can break above, that indicates that maybe, it's like using a derivative, that maybe some of the China stuff is actually going to go higher here. And we're right up to the trend line, the downtrend on the highs. These highs, these highs, these highs, these highs. Break above, probably back test it, and then we can move up. DWAC, that thing, it's getting a little volatility on the way back down. So it's people bragging on Wall Street Bets that I think it was $40 calls, doubled in money yesterday or whatever, but not too shabby, but that's still a downtrend. That's still pretty much this pattern. Yeah. Crazy euphoria and optimism. Complacency, we're going higher. It's just gonna take a little bit to cool on off. And then watch out. We do get some volatility. We get some pops on the way down, but ultimately likely to head on down. That's just the market psychology pattern. It's not anything I made up. All right. There's 100 million examples of this on the internet. That was the high, lower high, lots of chop. Working our way down. Watch out for the bigger flush down. Could this be a consolidation before it goes higher? It could. We could, I mean, that could be one of the consolidations on the way up. It could be one of these over here before we go up further. Could. But looking to me like that might be done for now. Be careful. I wouldn't chase it with my money. I'm not chasing it with my money. Intel, back to the roadmap line, finding support. This is healthy for a potential going higher. They announced some kind of $85 billion or $8.5 billion grant right there. I guess they got an $8.5 billion plant. Grant to build plant. Grant to build a plant. So that's interesting right there. I guess the build, whatever it is, whichever thing that is, potentially we're going to build chip plants in Arizona, New Mexico, Ohio, and Oregon. The whole reason the Intel moved chip plants out of this country is because they're not, they tend to not be cool with EPA. There's a lot of nasty chemicals and stuff involved in making chips. And that's why all the chip fabs basically moved out of this country and went to other places. So it'll be interesting to see how much chips we actually build in this country, because it's kind of a nasty, gnarly process with lots of horrible chemicals. And that's why we export this stuff to other countries, Taiwan, China, other places that don't have the environmental regulatory scrutiny that we have here in the United States at this point. So decliners for today, EQX, ouch, right back to the roadmap line. That would be exactly what I would have expected it to do. A break back above 876 could take us on up to 954. A break on down, though, could take us down further. And down further might be somewhere in this zone right here. When we break below that, we could extend down here. SMCI. What goes up is probably going to come down. There's the short-term support right there. We break below that. Roadmap line, 500. We break below that. This consolidation zone back here where we hung out for a couple months. And that's really where I expect it to come back to. Right back down there. SIG, time frame, a while. It could take all this year, all next year, before SMCI came all the way back down. Does it have to? No, it doesn't have to. I just expect it to at some point in the future. Signet Jewelers did the retrace right back down to the roadmap line. Highest high, lowest low on the current move. A break back above 101, 114, 122. That's a beautiful setup. BA, almost to the promised land. 160 area, 160 to 165 is my primary target where this looks the best. Does it have to get that low? No, we can find a bottom up here at 175 in the vicinity where we are. I mean, pushing a little bit lower than what we saw right here. 177 would be ideal for this to set up a bullish move. I don't think we're necessarily done right yet. I'm not looking for a long yet. I want to see this thing make one more flush, then a nice reversal. If we can flush one more time, then come back up through this zone, that's probably a long. Longing now is still risky because we could still see more flush, and this could still take a while. Like this, we're not necessarily done yet. We can still take this out into the summer for this correction here. DLR, looking for that to retrace on down. NASDAQ, well, it was on the droppers list, but that's now becoming a popper, looks like. Not too shabby. Kind of reversing here. Hit the 1272 already. 64 would be the next upside there. JKS, Chinko Solar, continuing the flush. What can I say? 21.19 below that. LFCR. Life Core, Biomed. Tap the 1272. 375 below that. Starting to look like we might turn into more of a dumpster fire. That is pharmaceutical medtech stuff. Be careful. Doesn't always follow the patterns. USO. Potentially setting up for the bigger move up. Let's just remove all this stuff. Simple as this right now. We're above the 618. The next target up, 88, right up here. How long does it take to get there? It could take, I don't know, out in summer, late fall, summer, fall. I mean, could take a little while. Puke. I mean, Prudential Public Land is puking. Dun, 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 dun. That high, that low, that extension would be 1386, would be kind of what I would expect. Watch out below. mRNA. Now, that's the actual company. If you didn't know NASDAQ was a company, that's the actual NASDAQ, not QQQ. NASDAQ, the people that run the market are a company. If you thought it was public, it's not. It's not a public resource. It's a company that tries to make money off of you trading companies that they list. mRNA, that's a lower high. Ugh, a nasty pattern. Sideways choppy garbage. And watch out for a breakdown. We get back below this stuff. Not looking too good here for continuation higher. So if we get below this 95 area, watch out for a move back down in here. If not, breaking even lower down in here on Moderna. Not looking very positive at the moment. Alrighty. So if I've said anything today that was helpful, beneficial, make sure you give me a like, thumbs up. And my bias for the day, to kind of wrap it up here before we get into it, I'm kind of thinking we get that pop, like 60-40. Kind of started out that way. And it's kind of still where I'm at. I think 60-40. We're going to see a pop. 52.16, it's kind of my near-term target, 52.50. And yeah, those are kind of the same numbers I'm seeing on ES too. Yeah, ES is not far away from the 51.50. You see a nice little pop there. The index about to turn green here. So, looks reasonable. Looks reasonable. Have a great day, everybody. Be safe out there. I'll be in Discord, hanging out as I always am. And I'll see you again